Welcome back to Incorporate, the podcast for business owners presented by the UB School of Management's Center for Entrepreneurial Leadership, where we break down the strategies, decisions, and real-world lessons behind building stronger businesses. I'm your host, Susan Steffen, Executive Director of the UB Center for Entrepreneurial Leadership, and I'm joined, as always, by our producer, Jordan Lima of Lemur Studios. Today, we're talking about a topic that for many business owners, they know they should focus on, but often avoid it if they can. Accounting and finance. We're talking about how to really understand your numbers, use them to make better decisions, and position your business for growth. I'm joined today by two experts who see small business finance from very different but complementary perspectives. Denise Neamon is managing partner of the Bonadio Group, one of the region's largest accounting and advisory firms. And Sean Quinn is vice president for commercial lending at Tompkins Bank and also teaches finance and strategy courses, giving him a unique lens on how business owners think about money and how lenders evaluate them. So welcome and thanks for joining me today. So I want to start with get right into this topic because I know Jordan's dying to hear more about finances because he loves it.
I have to say I felt personally attacked in your opening statement when you talked about business owners knowing they should do something but not doing it until they have to.
I was thinking of you, Jordan.
I'm very much that person, so I'm excited about this.
All right. So from your vantage point, what's the biggest financial blind spot that you see small business owners struggling with? Denise, you want to start us off?
Yeah, so I think one of the biggest things is they really don't forecast their cash needs. Seasonal dips, planning for their tax payments, changes in the economy, those types of things that can really impact their business and really help them, if they can focus on it, move forward.
Nice. Sean, how about you?
I think they're not supposed to be good at it. So their job is to run the business and run it really well. And I don't know as if they've put the time in or the learning to get really good at accounting and finance. So I think some of these folks out there struggle with what to do and how to do it.
So what do you think, why do you think they struggle? Why do you think accounting and finance feel so intimidating and very often kind of get pushed to the back burner? Why is that?
So in my mind, it's not their expertise. It's not where they play the game. It's not what they do day to day, right? They're experts in their area of their field, and that's where they want to play their time in their game. And so they don't know where to start a lot of times too. They don't have the education, the background, and the skills necessary to look at financial statements, interpret them, and really change how they operate their businesses. And I think too, a little bit of fear, right? If I go look at those financial statements and I'm not performing as well as I expected, it doesn't feel good. And I think for some people, they like to put those blinders on and keep moving through versus really taking the time, understanding them, and trying to figure it out.
I feel very seen and heard in this conversation right now. Accurate, very accurate, yes. But it is scary. And it's like what you said about expertise and what I do. I was a person that was really good at making videos. And that is very different from looking at spreadsheets and numbers and calculations and projecting for the future. And somehow it was just working out and it kept working out. But I'm understanding now when you're projecting and when you're looking at things for the future, how much better it can be than just getting by or getting enough to do what you need.
And I think, too, that a lot of business owners feel like they have to have all the answers. And so when there's something they don't understand, they worry about looking stupid, right? And so they sometimes don't ask these questions, even though whatever it is they do. I don't know the first thing about making videos, so I'd be asking a million questions. But somehow they feel like finance, they're supposed to know it already. I don't know why that is.
I think some of it's the terminology. So the folks that I talk to all the time, they know how to do it on the personal side. But as soon as you try to incorporate the business, which isn't really all that different, the terms get them confused. And when you don't have a really good, thorough understanding of what those terms mean, it's intimidating.
So, Denise, what financial reports do you think every business owner should truly understand, even if they outsource their accounting?
Absolutely. So when I talk to my clients, I really talk to them about a monthly financial package. If you're doing a really great job, what should be in it? At a minimum, profit and loss statement, how profitable is your business at any point in time, your balance sheet, your cash flows, your accounts receivable aging. Let's understand what we've billed to customers and what we still need to collect, your vendor payables reports, A lot of people like to look at their cash balances at points in time and just like to see that separately and what did that look like. Also having KPIs, key performance indicators, and measuring and looking at those and how can I position myself better as I move forward. And then kind of lastly, sales and revenue reporting. Where am I at today? What has happened in history? And where do I need to pinpoint and go forward? So I think those are the major ones that I would add in.
So a business owner that's working with an accountant, that would be something they could just ask to get those reports sent to them or provided to them on a monthly basis?
Absolutely. If they're using an outsourced accounting firm, they can get it there. If they're doing it internally, they should get educated, learn how to run them, ask their bookkeeper, ask their favorite accountant if their accountant's the one in their QuickBooks file. So all of those individuals that are working with the different size companies should be able to help and support to get them the information they need. And I guess the last thing I would add to is don't forget your budget to actual reports. You know, if you're doing a really great job, you're probably doing budgets, and looking at that is also very important.
And if somebody is maybe more of a startup company or a smaller business that hasn't yet either employed in a bookkeeper and accountant, and I know part of the answer here is that they should be, right? But they could run those reports out of QuickBooks as well if they're skilled and able to use QuickBooks on their own. That's something that are available reports, correct?
Absolutely, they can do that. They can use the help internally in QuickBooks to try to figure out how to run those reports. And of course, we're all into AI these days, so use your favorite Copilot, GPT. If you can't get those reports run, and ask them how to do it. And it's very useful, a good way to check it out and be able to do that for yourself.
And so I think I heard you say at least monthly.
Yes.
Is what the cadence should be for most business owners. Okay.
I would say monthly, but just to kind of add into that, if you have good financial reporting, weekly is great just to get a pulse. Monthly is kind of your point in time where you really take your deeper dive. Quarterly is where you get strategic. And annually is just where you reflect and you get some direction for the coming year. So you can kind of look at it in those pieces.
So a business owner who only looks at their financials when it's tax time is probably missing out on 12 months of being able to make some corrective actions, right? Or to make some changes that could improve the finances. Kind of looking at history rather than trying to help the future.
I can tell you from personal experience.
Keep coming back to you and the personal experience.
Yeah, no, this is really hitting me here. You'll find subscriptions. Why did I pay for that for the whole year? And if you were looking every month, you would know. And it's all these things that could be a year out. You've been paying for them. What were you doing? But when someone is going to start using the services of an accounting professional, what are they providing? What do they have to know or have in order on their end to provide you with the right information to do a great job for them?
Yeah, I think one of the things when people come to the table, and we have to understand their services, right? What do they really need from their accountant? Is it a deep dive day-to-day into the accounting type of support? Is it just you're going to come in at the end of the year and you're looking for us to help you clean up your books and records? Are you walking through the door and it's already in really great shape and you need us to produce a financial statement and a tax return? Do you want planning from us? Do you need sales tax help? Do you need help filing your 1099s? So every client that walks through our door is very diverse. So us really listening to them, understanding and meeting them where they're at is super important. So as people come through our door, I just tell them, put it all on the table. Let us listen, and then let us develop a package that's going to work for you so that you feel supported throughout your business journey and you're getting the key information that you need.
So not one size fits all.
Not one size fits all.
That's where it gets, I guess, a little scary because you're just like, what am I supposed to bring? I don't know. In my case, I was a person that was checking it out annually when I did my taxes, and I would spend like 4 or 5 days going through everything, and I thought it was like, this is the right thing to do. I'm making a really detailed spreadsheet, and I'm giving them all the information that they could possibly need, and I actually think it was good, but it was just way behind schedule and late and missed the ball. But are people doing that? Are they giving you a box of receipts? Like what is the best thing for you, or what is the average thing, I guess?
Sure. So very rare these days, actually, that they're still giving a box of receipts, although I do see it on occasion. I will not lie. But typically, we're reaching out to the client early and really letting them know what we need from them. So if it's preparing an individual tax return, you're getting what we call an organizer from us that reports out all your prior year data and says, here's what you have to collect for me this year. If you're a business client, you're actually getting a formal letter in the mail from us saying, here are all the things we need to prepare a complete and accurate tax return. So I think accounting firms are engaging their clients more to try to get better information to really become efficient and really give you the support you're looking for.
Excellent.
So, Sean, I want to switch over to lending for a second. So, we're learning how to maybe manage our money, but what happens when we need money? So when a small business comes to the bank for financing, what are you looking for? What records do they have to give you, and then what makes you want to give them a loan?
So I would say there's a lot of points to that question. A couple points that I want to make sure I make. Businesses, especially on the smaller end, typically handle their credit just as they do on the personal side. So if you're keeping your credit score in check, you're paying all your bills on time, you're not over borrowing in terms of what your capacity is to take on projects, most likely we're going to have a way to solve your issues. What we look for, a lot of the same information Denise would look for. We actually complement each other in that way. We definitely want personal tax returns, business tax returns, the most up-to-date numbers we can. So like we're in February now. So a lot of folks will have internally prepared numbers through the end of 2025. That would be fantastic. And then we do want a statement of the owner's personal financial statement. So what kind of liquidity does the owner bring to the table if there's a problem that happens throughout the course of the lending relationship? Those are really kind of the main drivers of what we're going to look for.
So what are the red flags that you see when somebody comes in that might prevent them from being able to get access to credit?
That's a great question. So big red flags are low credit scores, trying to over borrow, or you can go either way on a business. It's really important for a business to have the right lending relationship. A couple big causes of businesses failing is being either underfinanced or overfinanced. If you're underfinanced, you're going to feel handcuffed and you can't grow. You can't buy the equipment you need to run your business. If you're overfinanced, you're going to have a really big interest expense and you might not be able to handle that. So it's our goal as bankers to try to find that middle ground where your business should fall so that the stars align, more appropriately for you.
I want to go back to something you said there because you talked about their personal credit score and personal tax returns. And I know we talked to a lot of business owners who understand the separation of personal and business when it comes to how they created their entity, but don't realize that they're still tied together. So when somebody's coming to you for a loan as a bank, yes, you're looking at the business, and they may be a limited liability company or something where they think they're not responsible, but you're still going to ask for a personal pledge, right? You're going to get a guarantee from them. So they can't walk away from a bad personal credit situation, correct?
Correct. In lending, the business is so heavily dependent on that owner. We look at Lemur Studios. Without Jordan, there's no Lemur Studios. So we have to rely on his personal net worth. We have to rely on his personal credit report, the way he handles his own personal obligations. So it's very common for the owner to guarantee the debt for the business.
So when ideally would somebody come to you?
Hopefully sooner rather than later. That would be the trick. That's the goal. We may be able to put a plan in place to help these folks. Doesn't have to be for today or tomorrow. It could be for a project next year that they're thinking about. We can get all the steps in alignment to try to get them to the right end game.
So if somebody is listening to this podcast, and whatever month of the year it is that they're listening to our podcast, what are the various seasonal things they should be paying attention to financially? So in other words, we're talking right now, it happens to be maybe time to think about tax preparing. But when ideally should they be talking with an accountant? When should they be worrying about their records? When should they be reevaluating their banking relationships? Is there any certain times, or how often should that cadence be where they're kind of looking at their relationship and evaluating it, or whether they need to make a change or not in their financial makeup, whether it's with the banker or with the accounting firm?
Sure. So I know, Susan, when I talk to my clients or people that are actually even looking for new accountants, I talk about triennial periods. So if you're a calendar year end, when you get 6 months into your year, you want to get together with your bankers, your accountants, any of your financial advisors, and really take a look at where are we at 6 months through the year? How do things look? What do I think it's going to look like through year end? And what kind of business advice can I get halfway through the year? As we kind of transition into the fall months, it's all about tax planning and saving taxes. Let's face it, at the end of the day, most business owners don't care about financial statements or accountants giving them financial statements, believe it or not, because again, they care about taxes. They care about saving money. That's where their focus tends to be. So that fall time is a great time to get together to do that. Again, we're normally looking at September, October numbers at that point in time and saying, here are the things you can do to be strategic through year end. Okay. Sometimes at that point in time, they may need equipment financing. They may be planning on purchasing a building. They may need us to connect them with bankers and others to make those kinds of things happen before the end of the year. So typically you'll hear a lot about what should I do with my banking relationship? Where can I get lending? And we like to, again, build out our networks and be able to provide people that can help them in that arena, people like Sean at Tompkins Bank. So that becomes important. Beyond that, you're then flowing into year end. And in a perfect world, most people want to file their taxes timely. So for most entities, it's March 15th. For most individuals, it's April 15th. Some of them, again, extend, but most people want to get it done. Sit together, reflect on what has happened during that year, and then really focus on the future and take another shift. So those triennial periods tend to be a lot of good touch points when you're either talking to your accountant, your banker, or your financial advisors.
So if you wait till January, February, it's probably too late to impact those taxes, correct?
It's way too late. There are very few things that you can do within the tax law for, let's say, calendar year 2025 in 2026. There are a handful of things, but they are few and far between.
I think to add to that, accountants like Denise, we work with and we complement. In a perfect world, I would like to meet with the business owner right when she's done. So she's had the 2025 discussion. She's prepared all the statements. For us, having that information is very powerful to help guide us throughout the rest of the year. Now, in reality, what happens is we wait and wait and wait, and then we get to the last quarter, and there's emergencies. I have to buy this piece of equipment. I got to get it in this tax year. And it sets up some scary times because then it just adds pressure to everybody. So I think in reality, it happens probably later than it should, but in a perfect world, it would be March, April timeframe would be great.
Okay, so we've talked about when people need a loan. We've talked about the fact that people, businesses and individuals all have to deal with taxes. But how can we transition into how to use the financial information to actually run their business better? So I want to talk a little bit about what a business owner outside of those prepared financial statements could be doing with the data, either that they're contained or other data that they're getting out of their accountant systems or their QuickBooks or whatever it is, to actually make better pricing, hiring, equipment. What should they be looking at, and how can they be using those numbers better?
Well, I think one of the sort of initial ways that a business owner should do that is through KPIs. So when you have your financial statements and you have your books, you can take your KPIs, which are the key indicators for your business, which should be custom to what you do. Compare them to the year before, compare them to the industry averages. When you see I have a higher sales margin than another business, what am I doing good? What do I need to improve? Maybe your expenses are too high. Can I look at reducing some expenses in different categories? Maybe your interest expense is too high. Well, if we made money, maybe we can pay down some of our debt. Those are things that can happen after you've put the time in and you've worked with Denise and her team so that you can make better decisions.
One of the things I would just add to what Sean said is as it relates to statistics in their industries, I find with a lot of small businesses, they don't know where to go to get the data, right? So you talk about the importance of understanding where you sit and how well you're performing in relation to others. Just know that your accountant can provide that for you. It's a good place to go and ask for it. The other place is join an industry group. I mean, even as CPAs, a lot of us belong to industry groups. They can be people that are across the United States or even in foreign countries. A lot of these organizations, they come together. Everyone within those groups, they're reporting out data. They can be similar in size to you, similar in nature to what you're doing. And it's another great way just to grab some of that data if you don't currently have it.
And while we're talking about data, I want to make a plug for using your local library system because they often have access to great databases that you would otherwise have to pay for and typically have those reference librarians who can actually help business owners do some research, as well as universities. We're a pretty good place for that kind of data as well. So
in banking, all banks will look at a ratio analysis on all deals. So if you wanted to be ahead of the game as a business owner, having your understanding of your own KPIs and ratios you'll be a step ahead of other businesses.
Right. So you could literally walk in, just ask your banker to help you out with some comparisons.
You absolutely.
Yeah.
Well, so referencing my own personal pain points in the past too, Denise, you're from a firm that has extremely great reputation and servicing a lot of wonderful businesses. What do people need to look for when they're vetting an accounting firm or when they're choosing? Are there accreditations? Or is there anything that should be a red flag and say, stay away from that firm? How do people choose?
Sure. So I think people choose based on the complexity of what they have in front of them. And one of the things I will say in relation to that is size doesn't always matter when we talk about complexity. So when we're looking at your organization, are you just, if you're a New York State employer, are you just filing a federal and state return in New York? You can probably use a basic preparer, for example. But if you're filing in multiple states, you're doing complex transactions, you probably need a much larger firm to support you. So really understanding what you have in front of you, the complexity of what it is, and choosing your accounting firm to help you is going to be important. So making sure they have the right technical skills to really support the kind of work that you're going to need them to do is going to become important. I think, too, it's a relationship business. So it's about the people. When you sit with your accounting firm, are you comfortable with them? Do you trust them? Do you believe that they're going to provide you the services that you need and perform at their very best? So I tell people when you're going to look for an accounting firm, interview multiple firms. It should be a good fit on both sides of the house. Two, when you're going to your accounting firm, pick the accounting firm that's going to grow with you. Don't wait until you've outgrown your firm and they're no longer able to help you provide support, so on and so forth. One of the things that I would say to people is the tax law has gotten complex. When I started my career really early on, things were the same year over year. You could get really, really good at something. That has changed a lot. I mean, we just go back to the 2018 Trump legislation. We just had the big, beautiful bill. It's constantly changing, and providers can't be everything to everyone. So as you're interviewing and as you're looking for someone, really think about that. And also, do they practice in your industry? So many industries have unique issues. Do they have an expertise in your area? So those are just a few of the things that people can think about and really look for.
Jordan, there was a mentor of mine many years ago. I'm dating myself, but a mentor told me every business, no matter what size, no matter where they are, no matter what their products are, need a great CPA, a great banker, and a great attorney. And I always thought that was really, really good advice. And over the years, I started to think about how do you make sure that happens? And I think communication is the key. You have to be able to feel comfortable asking difficult questions to these people. If you really have a great communication with those three folks, I think you're setting yourself up for success.
And the time to get them is not when you absolutely need help, right? It's building those relationships ahead of time.
Two of the things, what you said about interviewing multiple people and trying to find a good fit, and what you're talking about, the communication aspect, that does seem to be so important because earlier in my journey, I just would say, I need someone to help me. And I would call up a service and they'd say yes. And then I would just go with it. And then I might not even really like them that much and we might not have good rapport. And they, in one case, might do a very bad job. So then it's like, you didn't check, you didn't figure out if they were the right fit before you engaged, and then you feel like you're locked in. So I love that advice. And I think I wish I had shopped around a little more. If anyone's listening, do it.
The other thing, just real quick, that I would like to add too is when you've been with your accounting firm a long time, sometimes I will have people come to me and say, well, my accounting firm's not really providing me this additional services that I need as I've grown my business. And I'll ask them the question, well, did you explain to your accounting firm what you're looking for? Well, no, I just really wanted them to be proactive and tell me. And, we don't always know what's up in your head or what's necessarily going on. There's a lot of touch points where we come together, but sometimes we don't know what we don't know. So speak up, talk to your accounting firm. It should be very collaborative. And so if you are with an accounting firm and you're not getting what you're looking for, talk to them. And if they still can't support, that's maybe too when you go look for a different firm and you interview a few.
With the CPA, banker, and lawyer, early in my career, I don't know if I was intimidated by those services or those people. Maybe I couldn't afford them. I don't know what it was, but I would always choose like an online option. I'd choose a fast, easy way to do it. And I thought that was the right way for me. I thought I was getting ahead by doing it that way. And over time, what I realized is that expertise from someone who is in a good relationship with you that can tell you what you need to know is going to hit those blind spots that you're not doing when you're just on an online template. So I incorporated with I can say LegalZoom, right? I wish I didn't. Having engaged with lawyers now and having them explain to me what's happening and what's best for me is really a great thing over these online services. And I'm developing a relationship with some bankers now because I just did online banking and thought, that's good for me. And it's not. If someone can help you, it's much better.
I think what's really good about having those three professionals in your corner is the why. So the why is just a really important component of business and how we operate. There's a reason why we're asking you for things. There's a reason why Denise and her team are asking you for things. And I just don't see how you're going to get that on an online portal.
Well, the other thing is what I find is we have a lot of business owners who, as part of our programs, we have them present their financials and they kind of dive in. And they can't answer some what I think are kind of basic financial questions. And sometimes the answer is, well, that's what the accountant said, or that's what I was told to do, but without understanding the why of why it was there. In some cases, I don't think it was the greatest advice because either one side didn't understand what was there. But again, nobody's going to care about your finances more than you do. You need to understand them and question them. And if the banker, if the accountant, if the lawyer isn't giving you what you need to understand them, that's a sign that maybe the relationship's not working.
I think it might be one of the biggest success stories that CEL does. If a business owner starts the program and doesn't really have a concept of how their finances work, when they get through, I think they really will.
At the orientation, there's an exercise where everyone's standing in a circle and they say, survey says it, who checks their financials monthly, take a step forward. And, people take a step forward. And then I remember being the one who, at the end, said, who does it only when they do their taxes? And then me and maybe two other people were the ones. But, people also, I don't think... Well, no, I was probably the worst. I'll take the loss on that one.
No. It's not unusual. We see that a lot, actually.
I always love the balance sheet one. Give the balance sheet equation. And inevitably, the only person standing in the middle of the circle is someone with a finance background.
So let's go back to our business owners who they recognize themselves in the stories that we're telling, and they want to start. They want to start somewhere, okay? What is one step they could take right now that would help their company's financial health? Something easy or a habit that they maybe do once in a while that they should do more often?
Well, I think a really good start is to check your cash balances kind of routinely every day if you can. I'm not saying spend a half hour on it. Open up your online app, check out what your cash balances are. In banking, a lot of times the time limits are quicker for businesses than they are for personal. So, for example, if you get hit by fraud, you may only have 48 hours to respond. If you're not checking those cash balances, you could get hit with that loss. On the personal side, you might have 60 days. On the business side, you're not. So I think that that's a really good place to start. I hope when you do that, it creates questions. I see this cash balance. What should I do with it? I see I don't have enough cash in my cash balances. What should I do? And maybe that's when you could reach out to a banker for help.
Right. Anything else?
I would say reviewing accurate monthly financial statements, get a handle on those, take a look at them, be curious, spend the time you need with your bookkeeper, your outsourced accounting firm, whomever you're working with, asking questions and figuring out what's really going on.
I think a piece of it too is maybe getting an idea of what I want to say is normal or what is kind of more standard, and then being able to compare your financials against that. Like I see so many business owners that really don't know what goes on financially anywhere other than their own business and don't realize $5,000 on marketing might have sounded like not a lot because of the marketing person who sold that to you, but for your business, that's actually a lot. Did you get the return on that? Or you're spending X amount of dollars on insurance, and yet your company's only this size. Are you overinsured? And so I think there's some comparison questions, and for some reason, people are really afraid to talk to other business owners about numbers.
And that's why I think it's so important to be involved in industry groups or even go get industry data, because it gives you a good feel for things like that. If you're in this type of industry, you should be spending 4% on marketing or whatever that number is. But I think that does help you narrow it as well if you are afraid to go talk to other people.
Yeah. I think we talk to a lot of business owners who are very focused on improving their revenue because they want to be more profitable, and they forget that there's a second part of that equation, which is if you improve your expenses, you also become more profitable. And sometimes that's a quicker path than maybe growing your revenue, which hopefully you do both and you're all good. But we see that a lot. People don't really understand their expenses.
Well, there's a fun component to that too, right? Yeah. So by growing my top line, I'm doing more deals, I'm talking to more people. When I start uncovering the hood, it might not be as fun.
That's very true. Yeah. It leads to some uncomfortable conversations too, right?
Well, right. And understanding your margin is super important. Just because you're driving the top line doesn't necessarily mean it's falling to the bottom line. So understanding margins and looking at that and making sure that work you're chasing is really profitable work.
I do a lot of conversations with business owners over understanding their costs, and from a place of how do you know if you sell more of that product that you're actually going to make more money? If you don't know that what you're selling it for is the right price, you don't know what it's costing you, and there are some business owners who've had kind of a wake-up call that they're trying to promote a product in reality isn't making them any money. And there may be another product or service back in, that they're not, maybe it's not as fun or as sexy, as glamorous to go out and sell, that would actually help their bottom line and allow them to do more different things, So understanding your costs, I think that's an area where the accountant can really help you dig in to understand what are all the components that go into it. Because, depending if you're a service company, sometimes that's hard for you to figure out, what pieces go into making up the cost of what I do. If you're a manufacturer, how do I handle overhead? What's happening? Those are all kind of cost accounting challenges, but they're things that your banker can help with numbers that will support those decisions. All right, so we've probably got some folks listening to this that feel a little bit like Jordan does, that they're overwhelmed by their numbers, right? Where, I know I need to pay more attention to it, just like I know I need to eat healthier, but how to start might seem daunting. So help us with one piece of financial advice. I know we've talked already about, monthly check on your numbers, but if they don't even know if they have those numbers, how can we have them start? After this conversation, they click end on the podcast. What should they pick up the phone and do?
They should enroll in the CEL program.
I did not pay him to say that.
Absolutely.
No, I think they you have to start somewhere, right? You just have to start somewhere. I think that first call, and I think Jordan would back me up on this, making the first call to whoever that is, whether it's an accountant, a banker, the CEL program, another business owner, do something. Because the more time that goes by that you don't, it gets harder.
Yeah. Yeah.
It's a journey too. You don't just hey, I'm going to learn this, and then you know it in an hour. You got to keep practicing, learning more about it, and being consistent with it to understand it. For a person like me, it's taken years, and I don't even understand it, but I do understand it much, much, much better. And the person I've been talking about this whole time that was very disorganized with all this, I found help. I have a bookkeeper that comes in now, and we're getting it under control. And through a Mastering Your Financials class through the CL program years ago, I learned how important it was to really deep dive and keep track of things. So it wasn't a quick fix. It took years and years to get to a place of really being stable with it. But it's possible, and what looks to be overwhelming at times, if you chip away, you get there eventually.
But I think that's really good advice, because I can't put on a podcast. I can't have this studio. I don't expect you to be a professional on accounting. I am not a professional podcaster. So
Right. It shouldn't be uncomfortable. You're not supposed to know it all. You're supposed to be able to find the people to give you those questions. So speaking of questions, what are the questions that you wish business owners would ask you that they don't?
I have a question that I would love for a business owner to ask me every time. What are the CapEx expenses for the year? I feel like business owners don't sit back and plan ahead to think about what upcoming expenses are going to happen. Sometimes they can be small. It doesn't have to be, I'm going to buy a building. But take a minute in the beginning of the year and think about what you really need by the end of the year.
And so define CapEx for us.
CapEx is any kind of capital investment the business is going to make that year.
So
It can
something
be
that's not an
equipment.
expense, a bigger
Correct.
purchase.
Yeah. It could be a leasehold improvement. It could be a larger piece of equipment. It could be anything that you need invested in your business.
So that then you can plan how they're going to find the money.
So we can help them get there.
Yeah, the money to do that. Denise?
Yeah, so mine would be, what could hurt me in the next 12 to 24 months that I don't see?
Love that question.
So that we can really provide the advice to them that they need. And I guess in terms of the clients that do ask the question, listen to what your accountants are telling you. Have an open mind. Think about what they're saying, and act on some of those things. I've had so many times in my career where I've been open and honest with people to that exact question, and they didn't listen to the advice that was given. And I get 12, 18 months out, and they're struggling. Mm-hmm. And so really have an open mind and listen to your advisors.
Well, and don't be your own worst enemy, right, and stand in your way. Which a lot of business owners sometimes, because it's not fun. I mean, and it requires some work, whatever typically is being asked, right? Whether it's getting your financials together, whether it's doing a course correction, going down a path that your business is. But I think what we hear from most business owners is once they understand the basics, it's just there's a whole lot of pressure off, because part of the angst was the unknown. Like, I don't really know what I'm doing here, and I feel like I'm faking it. Maybe there's some imposter syndrome. Maybe there's things going on. And when you have a basic understanding of your financials, even if they're not great, at least you're coping with it. And you know what the steps are, the people who can help you with it, rather than just like, I hope it all goes away and gets better. Do you guys have any good or bad stories that you'd like to share about a client that you've helped that might be telling to the rest of the audience here?
I have a lot of stories. I'm just trying to think of one that people could relate to the most.
Sean, I'm thinking of one that you and I had a story together. So way back when, we worked with a business owner who it was a family business, and I think he was second generation and taken over. And this story stuck with me because mom and dad had run a thriving business for a number of years without knowing their finances or their numbers or having these relationships by happenstance because of the product that they were providing was that needed. But things change, and the second generation, not so much. And they had no credit or access to credit or banking relationship, and all of a sudden needed to buy some stuff. And I remember them coming, I think they came to you to say, hey, can we get a loan? And they had zero record. And I remember we had, at the time, a student group that was working with them and having to dig in on their numbers and their business and kind of start so late in the game. And the answer that we ended up having to help them implement was not a bank loan at the time, because they didn't they didn't have any credit, really, any wherewithal to get it. And the answer we came up with was very painful compared to had they had that relationship with the bank and had a line of credit established, it would have just been a bump in the road. And as it was, we ended up having to close some things, sell some things, and lay some people off to get through the financial crunch that they were in, which was not a good answer, I think.
Yeah, that was, I do sort of remember that. It was a few years ago at this point. But I think stories are, we could think of, there's probably a story a month, to be honest, of a situation where a business owner was financed incorrectly. Whether I started my business on credit cards. Oh, it's like one of my scariest. That gives me the heebie-jeebies. I don't know how I'm going to make my interest payments every month. And I think all of these situations could have been prevented if the right planning was in place.
Wow, interesting.
Yeah.
Any other ones, Denise?
Well, for me, when I think about stories, I think about the longevity with some of my clients. And as you talk about multiple generations, so for me, when people come to me and they want me to talk about my client base or what I've done over the years, I can think about one client in particular when I started with the firm 33 years ago. And it was one business owner who had 4 sons. And his goal over the years was to replicate their business and have a location and a business for each one of his children. And so over the years, that business continued to grow. We provided a lot of services for them, and eventually they had a business for each of those children. And when that happened, the father was still alive, all the children were still alive, and as a family, they continued to grow. So we provided them day-to-day accounting, tax services, tax planning, gifting, estate and trust work, right? We connected them with health insurance brokers, insurance agents, bankers, all the people that could help them and support them throughout their journey. And it's amazing to see what value we can bring to the table and the difference that it really makes to those individuals that we're working with and the deep relationships that you build with people. And I'm proud to say the original owner passed away. He passed away in his 80s. And now the 3rd generation is coming in, and we have this amazing opportunity, again, to help them move forward, help them with the 3rd generation. Even some of the 3rd generation spouses are coming into the business. And this is one, Susan, I'll do a plug for CEL. I keep trying to get to CEL because, again, they didn't go to school to understand their finances in business, right? They're in a very specific industry that they understand inside and out. But they're going to need all of the help that we talked about today. And yes, your accountants, your bankers, your attorneys, they all can help you. But again, to get that education and support and understanding, what you don't know and getting it is going to be important. And CEL helps bridge some of those gaps along with people like us.
Knowing what I've learned about family business, that sounds like a remarkable success story.
Yeah.
And they must have had wonderful support in you because that's amazing.
Yeah. Surrounded themselves with really great people, really great advisors, and the payoff for them was tenfold.
And that sometimes I think people forget that these relationships, whether it's the time or the money they pay for the advice, it's an investment. And it's an investment in an ongoing relationship that's going to help you build, in that case, generational wealth that can be a legacy, right? Because I think sometimes when we go the route that Jordan mentioned on LegalZoom or whatever it is to get something done as an expense, which is fine, but then you haven't made that investment in the long-term relationship. And I think sometimes that can really pay off tenfold. Well, I think we're out of time for the podcast. This has been so educational for us. And I want to thank you both for helping us kind of demystify a topic that's so critical to business success. If you're a business owner listening, remember, understanding your numbers isn't about, we're not trying to make you into an accountant or a banker, but it's about gaining clarity, control, and trying to make changes to your business based on informed decisions driven by data. If you enjoyed this episode, be sure to follow the podcast, leave us a review, share it with any other business owners that you think could benefit. I'm Susan Steffen, and this has been Incorporate. Until next time, keep learning, keep building, and keep making informed decisions. Thanks for joining us.